Kia ora. My name is Amelia Sharman. I'm Director of Accounting of Climate Standards here at the External Reporting Board. The External Reporting Board is the independent Crown entity responsible for developing and implementing accounting, audit and assurance, and more recently, as you all know, climate reporting standards for Aotearoa New Zealand. The XRB's vision is that New Zealand prospers through effective decision-making informed by high-quality, credible, integrated reporting. We deliver this in two ways, by adopting international standards and New Zealandifying them, or developing New Zealand-specific standards, climate being our most recent example. In either case, we work to ensure that the reporting standards and frameworks are internationally credible and comparable, as well as being relevant to Aotearoa New Zealand. We are basing the climate standards we're developing on the 4 TCFD, Task Force for Climate-Related Financial Disclosures, thematic areas: governance, risk management, strategy, and metrics and targets. One important metric is the disclosure of Scope 1, 2, and 3 greenhouse gas emissions. However, we are very aware that Scope 3 emissions can be challenging to identify and then report on. The challenges can be different for corporate entities and for financial sector entities. For financial sector entities, the TCFD specifically encourages them to disclose their Scope 3 GHG emissions relating to investing, lending, and underwriting activities. And the TCFD has also recommended that asset owners use the PCAF methodology as a way to calculate GHG emissions for assets that they own. As the XRB develops its proposed disclosure requirements relating to GHG emissions disclosures, we wanted to help inform New Zealand entities about Scope 3 emissions, and specifically Scope 3 emissions reporting for financial sector organisations. We are delighted to have Angelica with us today to share more about what PCAF is and to get into the details of the methodology. We will make sure that we have time for questions at the end, both on PCAF and on the XRB's process. So please put your questions into the Q&A box at the bottom of the screen, and we will get to them in the second part of the webinar. Now, it is my pleasure to introduce Angelica. Angelica Afanador is Associate Director at Guidehouse, advising financial institutions on their transition to net zero emissions. She is also the Program Manager of the Partnership for Carbon Accounting Financials, PCAF, which, as we're going to find out, is an initiative that enables banks and investors to measure the emissions associated with their loans and investments. Welcome, Angelica. We are delighted to have you with us. Over to you.
Thanks very much, Amelia. It's a pleasure to be here with you and all the people, the participants that have joined. Thanks for the interest. I understand this is quite relevant for all of you in New Zealand, and I'm very happy to bring to you some knowledge about what PCAF is, why does it exist, the value of PCAF in your context, in this case, the TCFD, and how in a practical way can you as a financial institution can actually implement the methodologies so that you are in compliance with the regulations that come in the near future and with the recommendations of the TCFD. With me is also James Niven, who is a representative of the PCAF Steering Committee, and he will also be part of the Q&A session in case there are questions from the audience that are related to the practitioners, because James, he's part of the Global Banking Alliance for Values, but he was part of the Triodos Bank for a long time. So he has been also implemented PCAF in Triodos in the past. So we have him with us today as well. So let's start with an introduction to PCAF. What is PCAF? So it's an initiative that is global and it's led by the financial sector. So that means that a group of financial institutions initiated the initiative and have been running the initiative since 2015. The objective is to really standardize the measurement and the disclosure of finance emissions. This initiative started in 2015 in the Netherlands, and it moved to North America in 2018. And given the success of the approaches the preliminary approaches that were developed in these three countries, Netherlands, the United States, and Canada. Then it really went into a global mode where the networks of these three countries started to really ask for an implementation mode and say, okay, how these approaches that were preliminary, that were tested in these regions could be actually go in an expansion globally and implemented in a harmonized way. So that's why in 2019, around 50 financial institutions from North America, Latin America, Europe, Africa, and Asia Pacific got together and decided to launch global PCAF in New York in Climate Week. Below, at the bottom of the slide, you see 8 logos. These are the institutions that are the Global Steering Committee, and they are in charge of setting the vision, the mission, and the strategy of PCAF. And as Amelia said in the introduction, I am the program manager of the PCAF Secretariat, and the PCAF Secretariat is run by Guidehouse, a consulting firm for which I work. And in that role, basically, I report to the steering committee as all the PCAF Secretariat team behind me also does. So that's PCAF in a nutshell. And as I said at the beginning, 50 financial institutions started in 2019, at the end of 2019. Today, there are more than 170 institutions in 45 countries, which are representing more than $58 trillion in total assets. And here I put some examples of financial institutions that have joined PCAF that are large institutions. And the reason I do this is to highlight the fact that in 2019, it started with small, medium-sized financial institutions, mostly banks, but today there are a lot of financial institutions with large-sized portfolios and increasing asset owners and asset managers also in the initiative. And 2 goals, it's what PCAF aims to achieve. The first one is standardization. So really having methodologies for all asset classes where every financial institution in the world can use it, and it's comparable across regions. The second one is that more and more financial institutions globally use the standard, and therefore this target of reaching more than 200 financial institutions, 250 financial institutions by next year, end of the year. If you want to see the whole list of financial institutions, I'll leave you here the link, but you can take a look who they are. Now, for the first goal, which is the standardization of how the climate impact is measured, PCAF developed the Global Greenhouse Gas Accounting and Reporting Standard last year. And this was developed by a global core team of institutions. So from the 170 financial institutions in total, there were about 15 to 20 volunteers that decided to put the time and effort to work throughout 2020 to develop the methodologies. And that is in the spirit of the financial led initiative that it is. And what's the result? 6 methodologies specific for 6 asset classes. As you see here, listed equity, corporate bonds, business loans and unlisted equity, project finance, commercial real estate, mortgages, and motor vehicle loans. What is important with this methodology is that it was reviewed by the Greenhouse Gas Protocol. And because it is in conformance with it, then PCAF received the Built-on Greenhouse Gas Protocol mark. And that gives the industry really peace of mind that they are using a methodology that is in conformance, that it's in accordance with the rules and principles of the Greenhouse Gas Protocol. Now, the core team continue to expand the standard this year. So since January 2021, they've been working on 3 additional methods: green bonds, sovereign bonds, and emission removals. And on the 10th of November, we launched a public consultation on these 3 methods. And here I would like to extend the invitation to all of you check out the website, the PCAF website, and look at the report. Look at how you can participate in this consultation. You can select the methodologies that you want to read, and then go online into a survey and provide your feedback. It would be great to receive feedback from the financial institutions in New Zealand. Now let's talk about why it's important to measure finance emissions. So TCFD is the focus of this conversation. Before we go into that, I want to also bring a little bit of a perspective regarding the why of PCAF and the why of the standard. Yeah. So measuring and disclosing finance emissions, why do financial institutions care about that? Well, when we talk with the 170 financial institutions that join, and what they have in common are business goals related to climate change or to climate action. And here I have 4 business goals as examples of, say, the targets that they have and the reasons for which they actually join PCAF and measure finance emissions. Well, the first one is creating transparency for stakeholders, because by really assessing the carbon profile of their portfolios, they can understand how their investments are affecting climate. And the second goal is managing climate-related transition risk. This is the TCFD, and this is obviously as clear as it can be for you, as you have the regulation already in New Zealand, and the TCFD is very clear on how or what the recommendations are to measure the climate-related transition risks for financial institutions. The third and the fourth are actually also very important, because usually when financial institutions and even corporations think about the climate impact or the, let's say, absolute emissions in the real economy, the first thing they think about is the negative impact, the risk. And we also should think about finance emissions as a tool or as an opportunity to look into opportunities to develop new products in your portfolio and to help your clients and your investees to align their real economic activities with the Paris Agreement. So how you, as financial institutions, are going to help decarbonize the economy of New Zealand. So that is something that finance emissions gives also the banks and investors information of the portfolio and see how they can start the process, the journey of alignment with the Paris Agreement. So now let's turn to TCFD. So you are all aware, most likely, of the public consultation that happened this year, and where TCFD put forward a different metric, substituting WACI, which is the weighted average carbon intensity that was in the TCFD report from 2017, and replacing it with finance emissions. And this was achieved because of an engagement that took place for many years already between PCAF and TCFD, and also the institutions that are part of PCAF, that they saw the importance of finance emissions, and that the metric made a lot of sense for the analysis that they were doing, excuse me, in their own houses, basically in their own banks and asset managers, asset owners, and how that metric was helping them to assess the transition risk. And so today, it is great to have TCFD officially recommending banks, asset owners, and asset managers to measure and to disclose finance emissions in line with the PCAF standard. WACI is still in the TCFD, and as a recommendation next to finance emissions for asset owners and asset managers. And it is also said that it should be calculated in accordance with the PCAF standard. There is a chapter in the PCAF standard where it is where the benchmark metrics are described. So, and what I would like to give clarity on is that finance emissions is absolute emissions. So it's the first, say, metric that you have in order to develop, say, intensity metrics. So with absolute emissions, you can calculate the WACI metric as you divide absolute emissions over the revenue of the revenue of the company. So that's how you would basically use finance emissions to get to that metric. There are other metrics like physical activity intensity that is useful for the science-based target setting. If you, for example, use the sectoral decarbonization approach, that it's one of the methodologies of the SBTI, then you will use absolute emissions divided by the activity of the asset or of the company. So if it's, for example, an asset like real estate, it will be a square meter. So that's basically the theory on what is in the TCFD, and what I would like to now turn to is really the practical way. How do you calculate that? How do you use the standard to arrive to those greenhouse gas emission metrics for banks, asset owners, and asset managers? Now, there is something else. There is the insurance companies, which I didn't mention yet, and in the TCFD, there is the recommendation to use the CRO methodology, and they also mentioned that PCAF is currently working with the Net Zero Insurance Alliance to develop a standard on insurance emissions. And PCAF is also engaged with the CRO, so that not to start something new, something from scratch, but really engage with CRO so that the methodology that they have developed kind of like becomes well, not necessarily that the standard, but in conversations, in engagement, and really looking into standardizing or harmonizing the way that that insurance emissions will be calculated. So now there is a PCAF working group with insurance companies that are working together and the Net Zero Insurance Alliance to develop that methodology. So implementation. So now let's talk about practical ways of using the PCAF standard. So before turning into equations, this is the structure, the governance structure of PCAF. And the way implementation happens in the PCAF community is by having regional and national collaborations. And those regional and national collaborations are on this side of the slide. They are 5 regions: Europe, North America, Latin America, Asia Pacific, and Africa. And the reason they exist is because one of the topics that is the most challenging one when you come to measuring finance emissions is data. And data at a local level is more easy to be discussed and to be solutions are easiest to find when you get together with your colleagues, with your peers, and discuss the context of where you are doing this measurement. So that's one of the reasons. The second is the regions become a forum for financial institutions to engage and exchange the experiences they are having in the carbon accounting journey. And the third is finding solutions, specific solutions to specific challenges that are happening in those regions. And you see as well that below some regions, there are actually countries or sub-regions that have developed given the demand in those countries to really go deep in a specific questions or specific issues that these financial institutions want to solve. So here in Asia Pacific, we have PCAF Korea and PCAF Japan, which actually PCAF Japan was launched recently, a couple of weeks ago. And now that there is so much interest in New Zealand about how to measure finance emissions, what are the challenges, and how can you financial institutions solve these challenges and be able to actually report in accordance with the TCFD. I also extend the invitation to financial institutions in your country to, step up and say, if you want to develop a PCAF national chapter in New Zealand, just let me know, and we as PCAF Secretariat can facilitate that process and help form that group and arrange it and help you, go forward with that idea. So there is an open database. It's an emissions factor database that was developed by PCAF from 2019 to 2020 in order to close the data gap. So as I mentioned already, data is the biggest challenge that you will find when you start the finance emissions journey. And why is that? Because you as a financial institution are not directly responsible of the emissions of your clients or of your investees. You are indirectly responsible because you are financing the real economic activities of your clients. And finance emissions basically is the attribution of those absolute emissions of your clients depending on how much exposure your portfolio have on those clients. And so that means that you need to know what's the emissions of your clients or investees. And that then goes in the direction of asking the clients for those absolute emissions. At the moment, not so many corporations actually report or even calculate their own absolute emissions, scope 1, 2, and 3. So then that leaves you as a financial institution with two options. Either you estimate the emissions based on some physical activity from your clients or economic activity. And to be able to do that, you need emission factors. And this is the database that PCAF created to help financial institutions actually develop those estimations using these resources. This database is free for PCAF participants. It's transparent. You can see all the methodologies behind each of the emission factors, and it is charged with about more than 3 million emission factors classified by asset class, the asset classes that are in the standard currently, also classified by the economic sectors and subsectors with different industry classifications. Okay, so let's go into a little bit of more technical, and I'm not gonna go so deep, but this just to give you more of a taste of how is it that the standard works. So what I'm showing here, it's a very general equation. Please don't get scared about this. This is really two components that you need to know to be able to calculate finance emissions. The right hand of the equations is the emissions of your investee or borrower. So this is exactly what I was saying. You need to know your clients and your investees, who they are and what are they producing or selling or basically emitting. What is the climate impact of your clients and investee in the real economy in New Zealand? That's the part that you don't have in your systems and that you need to find out. The second part, which is on the left, is the attribution factor. And the attribution factor basically is defined by the share that you as a bank or as an investor have in the client or the investee. And it's defined by the outstanding amount, basically outstanding amount of a loan or outstanding amount of the investment over the total value of the company you invest in or the total value of the assets. And this formula is general, but for each asset class, there are nuances. And I will show you those nuances in a minute. The second point of this slide is the real definition of carbon accounting that you find in the standard. It's important to note that it's the annual accounting and disclosure of those emissions in a fixed point in time. So and that fixed point in time is in line with the financial accounting and reporting period. So you all do annual reports and annual financial reports. which are audited, and those are the reports that we see every year. Now, what PCAF would like to say promote is that those balance sheets that are put forward in the annual reports are basically the balance sheets that are assessed in the finance emissions calculation. So when you report finance emissions, at that point in time, you are making an alignment with your accounting reports. Now, when we go into the asset classes one by one, there is the nuance here in the attribution factor. There is no nuance in the right-hand side of the equation. Absolute emissions of your company, of your investee, stay the same, but the one that really changes in the equation is the attribution factor, the left side of the equation. So for listed equity and corporate bonds, the denominator is the enterprise value, including cash of the companies that you have invested in. The same for for listed equity, corporate bonds, and business loans is instead total equity plus debt. And then when you look at the assets like real estate, mortgages, motor vehicle loans, or projects, then the denominator is actually the value of that asset. And that is basically the nuance. And with that, I think it's pretty easy to implement the methodology. And I will say, let's turn now into questions and see what the participants would like to discuss.
Thank you, Angelica. So we've got quite a few questions. Firstly, I think this might have been answered, but it says, on your slide, it seems nobody in Australasia has joined PCAF, but we hear from the accounting firms that some of the banks are using the methodology. Can you tell us anything about adoption in this region, either by banks or asset owners?
Yeah, that's a very interesting question. And we know that accounting firms have been actually providing the services to financial institutions on calculating or doing all this carbon accounting journey. And we know this from two sources. One, last year when the standard was in draft, so it was during the summer of the European summer, a lot of accounting firms actually provided feedback to the public consultation that PCAF held on the standard. And they also contacted the PCAF Secretariat with questions about how to implement this, telling us that they had clients in Asia Pacific and New Zealand, Australia, etc. And the second source is that we have been also engaging with with XRB and with other partners in the region, trying to also reach more into the region to attract New Zealand financial institutions, Australian financial institutions. And I think to get to the say why there are no institutions from the region, it might be because PCAF itself, like the PCAF Secretariat, does not have really a presence, a physical presence in the region, and it's probably difficult to sort of serve these institutions there. However, that doesn't mean that this cannot be established. Because what I said at some point during the presentation is that if financial institutions in New Zealand would like to have a PCAF local chapter, we can make that happen. And the reason it works this way is because it's a financial institution-led initiative. So the PCAF Secretariat cannot just open a chapter in New Zealand and then because it's not a mandate for the PCAF Secretariat, we actually follow the institution and the institution's demand. So that's the invitation. If you want to have it, you have to call it and to call out and say, okay, let's do this, and we are very happy to support that.
Thank you. We've got a couple of questions about the database. So one asking whether non-financial institutions can access those emissions factors and whether or not there is an open source element to that database.
Yeah, so it is open source. However, only financial institutions that are part of PCAF can access the database.
Thank you. So we've got we've got so many questions, really good questions. So we've got one from Tim Grafton. Hi, Tim, from the Insurance Council New Zealand, asking what is the time frame for the development/implementation of a PCAF standard for insurers?
Yeah, so great question. They started, the working group started the work in October. And the plan is that the standard for insurance companies will be ready by end of next year, if not earlier. Yeah. And
then next question is the point in time. We talked about the point in time about when emissions are reported. The question says the point in time is in line with the asset manager's financial reporting period, not each individual investee company.
Yeah, financial reporting period, correct.
Thank you. Next question is, where do real assets other than real estate, for example, infrastructure, timber, agriculture, etc., fit in terms of the equation? What is the numerator and the denominator?
Wow, great question. That's a very technical one, but not difficult to answer. So assets as such would be taken into the project finance methodology. Usually what financial institutions do with project finance is to look first into the energy projects, because this is usually the largest, the largest sector the sector with the largest climate impact. But if your financial institution has a large exposure on agriculture projects, then you immediately can take that within the project finance, because it's a project, it's an asset. So the numerator is the outstanding loan amount or the outstanding investment amount on that project, on that agriculture project. And the denominator will be the equity plus debt of that project.
Great, thank you. Next question is saying, hi, assume you can use the actual emissions of the company if they are available. And then question also, would these include, this is a great question, would these include their scope 3 emissions? And if so, how do you account for double counting across the portfolio?
Double counting is always a question in all the webinars. And what double counting, it's not avoidable, right? I mean, double counting exists in the calculations of emissions of corporates. It exists in the calculation of emissions of financial institutions as well. So there's no way to avoid it. But what PCAF does and what the greenhouse gas protocol does is to minimize the double counting with the attribution factor. Yeah, because the attribution factor is taking the outstanding. So if you think from a bank point of view, you have debt or you have a loan into a company, but this company can have many loans from different financial institutions. Yeah, so then you are basically taking the share of your outstanding over the total value of the company, and with that attribution and with the principles of carbon accounting, you can minimize, not avoid, obviously, but minimize those double counting issues.
Right. Next question is, if asset values go up, attributed emissions would decrease, even with no change in overall emissions. How is this considered in the methodology?
Yeah, that's also a great question. So this is something that PCAF, the PCAF core team is looking into for listed equity, corporate bonds, business loans, and unlisted equity, which are the ones who have the denominator that can change with the market fluctuation. And they are looking into ways to correct for that market fluctuation. So they started to think about this issue this year. They haven't solved it, obviously, but they will continue working on next year. And next year, when the three methodologies go into the standard, the final methodology going to the standard, most likely these additions to the standard will happen. So, for example, the standard in its when you go to those asset classes chapters, there is a sentence where it recognizes that market fluctuation, and it gives some ideas on how to actually already address it, but it's not super clear in a way, because it gives various options. So now the core team is trying to figure out, okay, how can we really be more clear in the standard so that this fluctuation doesn't happen? If you think about the real assets, so real estate, mortgages, and project real estate and project finance, then that denominator does stay stable, because for real estate is value of the property origination, that stays always the same.
Great, thanks, Angelica. Next question says, you say few clients currently report emissions. What is the role of the engagement target? For example, this is a target to increase the percentage of our customers reporting emissions, i.e. then being compliant with PCAF and TCFD.
Yeah, so when I meant not reporting, I meant the clients or investees of the financial institutions. So at the moment, if you go to the website of PCAF, there are about maybe close to 30% of the 170 financial institutions that are already reporting their finance emissions. But this metric, it's really not, it's not very telling, because the growth of PCAF is so fast that it would be kind of unfair to say, well, 30%, but it fluctuates in that regard, because the flow of new FIs that join is higher than how fast you can develop a report. Yeah, so that's an unfair metric. In terms of the companies, so the companies of say the investees or the borrowers of banks and investors that are not reporting, say, to CDP their emissions, yeah, that's an issue. And the issue, how is it solved? It's a systematic problem that requires a systematic solution, and it's not the financial industry own responsibility to define, to force their company, so to force their investees or their borrowers to report it. Yes, there should be an engagement strategy with your clients, with your investees, but think also about what's the incentive that, in your case, in New Zealand, the government is giving to the corporations. Are they requiring companies to measure their emissions, their climate impact? If they would, then we will make it easier for financial institutions to measure and report finance emissions. So it's a systemic solution. It requires the input from so many stakeholders in the country.
Thanks, Angelica. We've got two questions which I think actually probably best for the XRB to answer. So we had a question about where does the TCFD reference to use PCAF? And I provided the information in the implementation guidance. And the question says, in regards to asset managers, though, it still says to calculate weighted average carbon intensity, so WACC, in line with PCAF. Does that mean using finance emissions calculated using PCAF to ultimately report WACC then? And then the second other related question is the XRB mandating compliance with PCAF? If not, what is the chance XRB will mandate a different measure? So in response to both of those questions, so what the XRB's project is to essentially transform a voluntary reporting mechanism, so TCFD, into a mandatory climate standard. So we are currently doing the work of how we require GHG emissions disclosures, what the guidance will say relating to particular methodologies. We are doing that work at the moment. That consultation document will be out in March 2022, and we'll be asking lots of questions of stakeholders around using other methods and what types of metrics we think are appropriate in the New Zealand context. But what I would say is, even though that is March next year, if you have any thoughts on that, please do not hesitate to get in touch. We have the climate@xrb.govt.email. You can give us your thoughts on LinkedIn or any other method to get in touch. We are currently actively deciding our proposals around these areas. So the next question is, and I think this is a great question too. Banks in New Zealand find it challenging to get data on the emissions of small and medium enterprises, typically because the business itself does not know its own emissions. Has this challenge been solved in any creative ways in any other jurisdictions?
Yes, there is one institution that actually is part of PCAF. It's BBVA. It's a bank in Spain, one of the largest banks of Spain. And I actually can share that link with you. It's called, they develop a digital solution that is called OneView. And it's targeting SMEs, small medium enterprises. And what they do is that these small medium enterprises have bank accounts with BBVA, and they offer a carbon accounting tool. So they say, okay, you pay electricity bills, energy bills, and by paying those, you agree to, so your client agree that we, BBVA, use the electricity and energy that you use to calculate the impact of your business. So they are getting data with this platform, and with that they can actually measure their finance emissions. It is not fully, say, 100% successful, because there are some tweaks that they are at the moment doing. There is, I mean, it's a new tool. They are trying it. Their IT engineers and figure out other ways to kind of lure the clients into the platform. But it's a very smart way to engage with the clients.
Yeah, that's really interesting. Go back to the question about the denominator. The question is, in the denominator, why add cash for public companies but not for private? Is this simply a disclosure issue?
Yeah, so the private companies do not have EVIC, yeah, so they don't have that denominator. And the second one is that the European Commission, they have a regulation in the taxonomy, the green taxonomy, where they have recommended EVIC as the metric to, so the use of EVIC in the metric for the reporting for financial institutions. And so when PCAF was developing the standard last year, the taxonomy was developing also the metric. And what PCAF did was to engage with the European Commission in order to harmonize, so that the PCAF standard would not come up with just total equity and debt, and the taxonomy will be with listed equity. And there were really technical discussions, questions on this for a long time, until it will settle. Okay, it will be listed equity for public companies, and that is the main reason for that harmonization.
Thank you. We've got such great questions. Thank you everyone for participating. It's excellent. So how would PCAF facilitate that the data is available for regulators or auditors to verify that the information is correctly obtained from the database?
Okay, the database, okay, so maybe the database is just emission factors. Yeah, so it's not finance emissions. It's just one piece of the whole puzzle. Mm-hmm. And yep, go ahead, Amelia.
And I mean, there are New Zealand specific emissions factors for lots of things, and they are publicly available from the Ministry for the Environment. So
that's wonderful.
There are different sources of emission factors in New Zealand.
Okay, no, but then you don't need the PCAF database probably. If in New Zealand there are emission factors published by the government, then yes, of course, go ahead and use it. That's the best source that you can have. And I mean, best source you can have, assuming that it's calculated in the right way and that it's approved. And yeah, and that's what the PCAF database does. Behind the database, we have technical experts that are always reviewing the emission factors methodologies to make sure that they are correct. In terms of the, oh, sorry.
No, you go, Angelica.
In terms of the auditing, that's important, but it's not part of the database. It's part of the emission calculations. Yeah, so PCAF does not have a mandate to verify and to audit the calculations. The mandate of PCAF is developing a harmonized methodology, the standard, and support the financial institutions in implementation. Now, the theory of change of PCAF wants to achieve that all of the stakeholders in this climate ecosystem take part, and that includes auditors. Yeah, so the auditors are learning how finance emissions work, so that when the financial institution comes to them and say, okay, I got my annual report, and I also have a chapter on finance emissions and climate reporting. Can you help audit this? And they know they are now know how to do it because they have been learning in the last year. And the PCAF Secretariat gets a lot of questions from auditors, from consultants on how to do it. So that's basically knowledge sharing, and to be able to get all stakeholders on board.
I think, and we've got a couple of questions kind of relating to this. So yeah, are there specific emissions factors for different countries to use? Does the emissions factor database have New Zealand specific emissions factors given the very different emissions profile of New Zealand? So I guess, and what we're talking about is saying New Zealand does have some, there are other emissions factors in the database. Maybe, if some financial institutions do want to join PCAF, that might enable the addition of specific New Zealand emissions factors to be an input into the database.
Absolutely. We will welcome that. If you have emission factors in New Zealand that are not in the database, we will be super happy to add them there, because it's a collaboration, and it's to help everybody that needs them. Yeah.
Right. The question is, does PCAF use the concept of double materiality? And should New Zealand entities use it? So for those who don't know, double materiality, so materiality at the moment in the TCFD world is it material to the organization itself? Does climate change impact on the organization? And double materiality is asking, well, what is the impact of the entity outwards on climate change? So how is that incorporated into PCAF?
So if I understand the concept correctly, the double materiality looks into the impact of the financial institution, in this case, to the outside world, right? So the climate impact in this case is twofold. One is the impacts of the operations, so scope 1 and 2 of the financial institution. And then the second one is the scope 3, and in this case, category 15, which is the financed emissions. But then remember that the finance emissions are not direct impact, it's indirect impact, because it's the financing that it's going into the real economy. So that's, I haven't heard of the double materiality concept, but if I understand it correctly, this is how I would interpret it.
Thanks. The next question is, hi Angelica, I saw a reference to CDP and SBTI on one of your slides. Could you talk about their link to PCAF?
Oh yeah, definitely. So with CDP, we also engaged since 2 years ago in order to get also the harmonization of metrics that CDP was requiring from financial institutions with the PCAF standard. So it all happened in parallel. Remember, the PCAF standard is just 1 year old. Yeah. So that all this engagement happened since 2 years ago, and CDP developed a financial questionnaire. And in that questionnaire, they asked financial institutions, do you measure finance emissions? Which methodology do you use? Do you use PCAF? Yes. Okay. Which asset classes do you measure? And what portion of your portfolio do you measure? So it really goes into that level of detail, and then give you points. If you use the PCAF standard to measure, then you get a better score. That's the relationship with CDP. The relation with the SBTI is very similar too. So with the SBTI, we worked already also, I will say 2 to 3 years. In terms of developing the financial financial guidance for institutions that want to set targets based on the sectoral decarbonization approach. And the sectoral decarbonization approach uses absolute emissions to be projected in the future. And so when you think about the sectoral decarbonization approach for financial institutions, then you also think about attribution. And that's when PCAF comes into place. To be able to implement a sectoral decarbonization approach in a portfolio of a bank or of an investor, it is needed to calculate finance emissions first. So that is the baseline that you would have. And then with that baseline, you do the scenario analysis into 2050, for example. And then with that modeling, you identify your targets that could be intermediate or a net zero target by 2050. And what does that mean? So that's basically the link between PCAF and the SBTI.
Excellent, thanks, Angelica. And James, we have a question for you. So thank you so much for joining us. We're really delighted to have you here with us today as well. So the question is, what advice does James have from a practical angle for banks when starting on PCAF?
Well, thanks, and thanks very much for the question. It's great to be here, and good morning to everyone. I would say there's a lot to share, but I'd say it's three key things. So I would say work with other financial institutions. So I was fortunate to be involved at Triodos Bank, where, full disclosure, I do not work anymore. I work for the Global Alliance for Banking on Values, but I worked at Triodos for 20 years. It's a pan-European sustainable bank, but we worked in really getting started with PCAF in a Dutch chapter. It made all the difference. It was practitioner driven. There were creative solutions found to different problems, and working with peers really helped. I would say also don't be too scared about data quality, because it's a question everybody has, but be very transparent about it. So Triodos Bank really is at the sustainable end of sustainable banking. So it does a lot of energy finance, but it's only in renewables. So that's just to give you an idea of the kind of institution it is. So Triodos Bank stakeholders are very demanding about how accurate things are when it relates to sustainability in general and environmental impact in particular. But because we were very clear about data quality, even when the data quality was very poor, I can honestly say in the 2 years of reporting we did, and we ended up reporting all of our the greenhouse gas emissions of all of our assets, there wasn't one question about data quality. And then finally, I would say just get started. So it's even when we started with it, there was lots of skepticism at that stage. People were saying, is PCAF going to be something others use? Are we backing the right horse? But just by getting started, by forming a small team and just getting on with it and starting to produce results, you can build an awful lot of momentum. And it's a cliche, but really it was, don't let perfection be the enemy of good, because once you start, you can really get in a positive role.
Oh, thank you, James. That's some excellent advice. We've got a couple of very more technical questions to round off. I think we can squeeze them in. So question is, do custodial operations need to disclose on behalf of their clients, or is this left to the asset managers / beneficiaries?
So a custodial would be what, an asset manager as well?
I think so.
Because
yeah, interpreting the same as you.
Yeah. If it's an asset manager, yes.
Okay. Maybe if there's any clarification on that one, please send that through to the XRB, and we can answer that as well. And the final question we have is, what about the concept of facilitated emissions, i.e. non-lending and non-investing financing activities such as underwriting or advisory services? Is this something PCAF is trying to develop a method on, and how will this work?
Wonderful question. That's really great to hear that question, because this year the core team also started to think about this new concept. And it came out from large banks that have the facilitation services, facilitating transactions, and they were a bit confused and with lack of method to actually calculate the impact of those transactions, because finance emissions looks into what is in the book of a bank, for example. So there is actually a public consultation document. It's a draft paper of few pages that explores the concept of facilitated emissions, looks into the challenges and the options to solve those challenges. And the idea is that PCAF wants to hear from stakeholders. So I invite the person that is interested in this topic, please go to the website, the link that I have in the deck, that will give you the information on this second report. And you can also participate in the public consultation of that report. And the core team will work on developing a methodology for facilitated emissions next year.
Fantastic. Well, thank you so much, Angelica and James. Is there any kind of last key message you'd like to share with our New Zealand audience? I'll go to you first, Angelica.
Yeah, okay, thank you. No, I feel very happy to have been here to share with you. Happy to have to see so many participants in the call. And I just want to reiterate the invitation to join PCAF and to create the national chapter, if you will. And I'm here to help. If you have any questions, please reach out to me. We have a large team in the PCAF Secretariat that also can support you with more technical questions if there's need.
Fabulous. And James?
To echo, there is an opportunity to take a leading role here. The organization did take some of these first steps, have really benefited in the Netherlands context, but I think in other parts of the world as well. So yeah, a big shout out for a chapter and for some early movers to get involved. It's really worth doing. And also, as Angelica said, there is an awful lot of fantastic help from the PCAF Secretariat, and they can also put you in touch with other practitioners. People are interested in sharing their expertise and their knowledge, and they want to see others successfully. So please reach out.
Well, thank you so much, Angelica, for your time. Thank you, James, for your time. Thank you, everyone, for your fantastic questions. I hope we've answered them, and if not, please send us an email to ask for any clarifications. The XRB is continuing on its process to develop the disclosure requirements in this area, and we're really input. So thank you again, everyone, for your time. Kia ora.
All right. Thanks very much, everyone. Thanks, Amelia.